What is going on, everybody? This is S Trades, and this is day 14 of the bootcamp. And in this video, we're going to be going over changing the state of delivery, also known as CISD. So, without further ado, let's get straight into it. Okay, so what is CISD, right? As it says in the name, it's literally change in the state of delivery, right? So, let's say in a certain point of time, you were bearish, right? The price was going lower and lower and lower, right? Taking out the lows and things like that, right? And at some point, you're going to have a change in the state of delivery, right? Which is also kind of like a reversal, right? So change in state of delivery would occur when price would sweep out some sort of liquidity, right? It could be like a major internal low or high, or like a internal low that's like right next to it, right? So for example, in this case, right, let's say you were bearish, right? Price kept going down, making lower lows and lower highs, right? And at some point, right, price ends up sweeping out this low, right? So it has to have a sweep, right, in order for a change in the state of delivery to occur, right? Whatever the down close candles are in this, whatever the candles that close below this low in this case, right, whenever price closes above those candles, that's when a change in state of delivery happens, right? So in this case, right, we had all of these bearish candles, right, they're going down and closing below this low, right, this internal low as we sweep it, right? So then what we want to see is bullish candles kind of coming to this price action, right, and closing above the last previous candles that pretty much swept this low, right? So again, I might have kind of rambled on there for a second, but pretty much whatever candles, right, swept the liquidity, right, the last candle has to be the same color, right? So for example, in this case, it would be the bearish candles, because the bearish candles are the ones that are sweeping this low, right? So whatever, it could be one candle, it could be two, it could be three, right? It just depends on how many candles were in this leg consecutively that swept out this internal low, right? So let's say if there was two candles, right, let's look, 1, 2, that ended up sweeping out this low. So once price closes above those two candles, right, then that's when we get change in the state of delivery. Then we could expect prices to go up higher, right? And same thing in a bearish case scenario, right? So what you would have is price go up, right, making higher highs and higher lows, right? And then at some point, right, when we sweep out that next internal high, right, then once price comes down and closes below these bullish candles, right, that made the sweep, right? So let's say there's three candles in this one, right? So let's say 1, 2, 3 in this leg, right? And they were all bullish candles, right, that ended up taking out this high, right, and making the sweep. So once there's a bearish candle that ends up closing below those bullish candles that made the sweep, that's when we get change in the state of delivery, right? So some people are, some people like changing the state of delivery, some people don't. I use them personally, and I think they're pretty useful to just kind of add like a extra confidence to your trades, right? Like I said in the previous video, my entry model is inversions, right? But I also sometimes enter on changing the state delivery when, like for example, a draw liquidity is really clear, but we do not have an inversion, which rarely happens, right? But if let's say I see an inversion, right, because the way you would see things come in order, right, first you would have an inversion, then you would have a change in the state of delivery, and then you would have a market structure shift, right? So once you have an inversion, then you'll be getting a change in the state of delivery, right? So then that's kind of like an extra layer adding on top of your trade, right? So taking a quick look at this example, right, what do we have here? We have a little downtrend occurring in here, right? So we have making lower lows and lower highs, right? And this is the most prominent low, right? So what do we see here, right? Once price ends up coming down lower, right, and then we see an immediate reaction back up higher, right? So now you can take a quick look at which candle ended up sweeping out this internal low, right? The most obvious low, right? Not this one, because this was just like a very like a little swing low, right? Didn't really count, but the obvious low, right? So in this case, right, which of these candles was the one that swept out this internal low, right? In this case, since we're looking for a bullish CISD, right, we have to look at the down close candles, right? So in this case, right, this would be my CISD, right? And also the way you draw the CISDs is at the opening price of the body, right? So price ends up opening up on top for a bearish candle, right? So you would draw the CISD at the top of the body, right? You wouldn't draw it at the wick like this. You would draw it at the body, right? So in this case, right, this would be our CISD, right? We have closure above this opening price of this down close candle, right? So once price ends up taking out this prominent low, right, then price comes back up higher, and then once you see this candle closing above it, right, you could just literally simply enter along, right, setting your stops below this low, right, and then you could set your TPs to, let's say, this high, right, or even Asia high, right, and then as you guys can see, price ends up absolutely smashing that, right? So in this case, right, you could either enter straight away as the CISD gets formed, or wait for a pullback back into that CISD, or maybe there's like a fair value gap, right? So that's up to you guys for you to decide. For example, right? So what do we have here, right? We have price again pushing down low, right? We're in a bearish trend, right? And we see price come down, right? Taking out this low, right? An internal low. Now we could be potentially looking for a CISD, a bullish CISD, right? So which in this case, right, which candles closed below this sweep, right? Which ones ended up kind of taking out the low, right? So in this case, it was all three of these, right? So all of these down close candles, right? So you can't, for example, choose this one, right? Because that's not the CISD. So you have to take out all of the candles that are involved, right? So in the previous example, we only had one down close candle in that leg that ended up taking out the liquidity, right? So in this case, there's three consecutive candles, right? They're all down close candles. So in this case, you would have to pick the ones on the highest one, right? So in this case, it would be this one, right? Again, you draw out the CISD level at the body, right? Not at the wick. So then once you do that, right, this would be the CISD. You could, again, like I said, enter along right away, right? So it stops below here, and then target Asia highs, right? And as you guys could see, price ends up absolutely smashing it, right? Or you could wait until price pulls back, right, into that CISD, right? And also, as you guys can see, that this CISD ends up forming as a fair value gap, right? Lower fair value gap, right, in this leg, which is this one, right? So which in this case, both of them get filled, right? And then once price comes down, taps it, and then you see price just immediately sending higher, right? So this is kind of how you start putting things together, right? So CISDs would also work, right, when you not only sweep out like a random internal low or internal high, right? It would also be a lot more beneficial when it sweeps out like a very prominent low or prominent high, right? For example, like in the liquidity videos that I showed you guys, like previous sessions, right, or whatever like that, things like that. Or if it taps into like a higher time frame PDA, right? For example, like a 15-minute, 30-minute, hourly, 4-hourly, daily, weekly, whatever, right? And then it makes that internal low sweep, and then price ends up coming up high, right? So let's take a quick look at more examples. Okay, so in this case, right, we have this, right, prominent high, right, then ended up putting up, and price comes up and sweeps that high, right? So now we have to see which up close candles in this case that ended up taking out that level, right? Because we're looking for a bearish CISD, so now we have to look at up close candles, right? And then in this case, it's these two candles, right? So you wouldn't count the third one because this third one is a down close candle, right, instead of up close candle. So in this case, you would only count 1 and 2, both of these candles, right? And then you would just draw out your CISD level at the opening price of that up close candle, right? And then in this would be the CISD, right? So again, you could either straight up enter a short in this position, right, just as the CISD closes, right, set your stops above the high, right, and then let's say, target like a 1 to 2, or target, some sort of a low, right, in this case. Or what you could do is wait for a pullback, right? And as you guys could see, right, a lot of the time CISD kind of occur and they pile up with other things, for example, like a fair value gap, right? So as you guys can see in this leg, right, we form a 5-minute fair value gap, right? So instead of, let's say entering a short down here, we can set our limit to this fair value gap. Right now we have a better risk to reward, and then we can set our stops over here, and then target whatever we want to target, right? So, and this also works on higher time frames, right, which is again hold more power. So in this case, let's say we're on a 30-minute, right, and what do we see here? We have a previous day low over here, right, to our left was very prominent low, right? And we see the very next day price comes down, right, taking out that low, and then we pretty much, let's say if we were bullish, right, we would be getting a bullish CISD in this scenario. So now which body would we look at, right? So we're going to be looking at the down close candles that ended up taking out this liquidity, right? So in this case, it's these two candles that took out the liquidity, right? So you would pretty much draw at the opening price for the CISD, right, which is over here, right? Let me just extend it out so you guys see. So in this case, this body, right, this opening price would be the CISD. And again, like I said, you could either enter along or right away as the CISD closes, right, putting your stops below the lows and targeting, say, the internal or whatever you want to target. Or what you can do is, again, wait until the fair value gap, right, gets formed and re-enter on that. So we have another fair value gap lining up with that CISD, right here. So you have a 30-minute fair value gap and a CISD, right? So now we could enter on that fair value gap tap, right? Again, perfectly gets executed, right? Stops below the low, and then targeting whatever, and then price ends up absolutely going to the moon. Okay, so another example we have right here, right? Say we have this 1 hour fair value gap, right? If we come down on a lower time frame, right? So we see price comes down to this fair value gap, right? Taps into that 1 hour, right? We still see that every low that gets taken out, we do not get a change in the state of delivery yet, so there's no entries, right, as of so far. But then, right, what we have here is price ends up coming out, taking out a London low, right? In this case, right, price took out London low, tapped into this discounted 15-minute, and now we're in a 1 hour fair value gap, right? We're holding all these three confluences, right? And then what also do we have? We have the down close candles that ended up taking out this liquidity, right? Which is this right here, right? This is what ended up forming a CISD. And we also have this 15-minute fair value gap in this leg that got inversed, right? So like I said earlier, right, we would get an inversion first, then you get a CISD, right? And in this case, this is where you would have a market structure, but let's not get into market structure yet. Will be in the next video. So not only that we get an inverse, right? Not only that we sweep the liquidity and tap into the 1 hour and the discounted 15-minute, and now we finally get our entry model if you're using CISDs in this case, right? Because price ends up closing above the CISD, right? So now if you take a quick look at what happens, right? Price ends up coming back, tapping into that CISD, right? And then we come down even lower, right? Tapping the same with this order block, and then we end up sending higher, right? So again, you could either just enter straight up on that close, right, of the CISD, right? Stops below and targeting, say, these highs, right? You could either do that, or you could tap, you could enter on the retest of that CISD, or in this case, right, to get better risk to reward, right? Okay, now taking a quick look at this example, right? We have Asia low over here, and we have London low over here, right? So now there's two case scenarios for what to not enter in, right? So in this case, right, we swept London low, right? Which down close candles ended up doing that, right? It was these 1, 2, 3 candles, right, that ended up taking out that low. And in this case, right, you would enter long once this CISD occurs, right? So you guys could see that even with CISDs, you can't pre-fire. You have to wait until the candles close below or above the bodies, right, the opening prices. So as you guys can see, the wick went above the opening price, but we never closed, right? So in this case, there was no CISD, which is why price came down again lower, re-sweeped this internal low, and it took out now Asia low, which is even a better confluence, right? So now you can see which down close candles ended up taking out that low. And in this case, is this 1, 2, right? These two candles that took out that internal, right, and the Asia low. So you would draw out your CISD over here, right? And so this would be our CISD, right? You would enter along on that closure of the candle, stops below the low, and you target the previous day high, which is this one right here, this red line, right? So this is pretty much it for CISDs, right? It's a pretty simple concept, right? It's not that hard. That's pretty much it for this video, guys. Again, it's very important that you guys wait until the CISDs get closed above the opening prices for the candles, right? So just like with inversions, you cannot pre-fire these. You have to wait for the confirmation to happen, because a lot of the times it's going to give like a fake out, and then you're just going to get stopped out because you weren't patient enough, right? So wait for the actual bodies to close above and below the candles, right? So, and CISDs might not be your thing, right? But my job is kind of to teach you guys all the things that you guys need to know, right? Because I use CISDs, right, but I don't use them like crazy every single day, right? I use them here and there because my main entry model is IFEGs, right? So, and it doesn't say anything that the CISDs are bad or anything, because I know people that straight up just trade changing the state of delivery and they bank, right? So again, it's whatever makes sense to you. It's whatever you feel most comfortable with trading, right? Whatever kind of makes sense in your head, right? Changing the state works for me, right? It makes sense, right? But inversions is just kind of what fits me the most, right? Not that inversions, not that CISDs don't work, right? But like I said, yeah, that's about it for this video, guys, and I will see you guys in the next one.